The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman.
Hi folks, Basil Chapman here. Come, what is it? Snow, high tide, low tide, storm, sandy, whatever it is. We will somehow get our show done today, Monday, Tuesday, Wednesday, Friday, Saturday, or Friday. This is the Tiger Technicians, 11 o'clock till 12. Of course, I couldn't be here yesterday because of a power outage here in Newton, Mass. The Garden City, of course, it's called the Garden City for a good reason. You got all these beautiful trees, and it's green, and those trees go over very quickly when there's a very strong wind. And Monday afternoon, at about 4 o'clock, there was this really strong gust. I think that gust must have been 85, 90 miles an hour because it just suddenly snapped the tree right in front of my house, knocked out power, but it also snapped the line down on the street that I overlook, and that's the one that was the city, N-Star Electric. So that's out, and I can see them finally getting to work there. They had to cut down this huge tree. That tree missed my wife as well. So it was 2 minutes there, maybe 1 minute here, because it's just 30, 40 yards away. So you got to say lucky. Everybody's safe. Everybody's cool. It's just very cool because it's getting cold and there's no heat. But you know what? Worst things can happen. There are people there with really devastating problems. And white light to them. We will be fine. I've already got the tree cut away. The guy's coming to have a look at the damage, and we'll see what goes. Now, what's most important is that this market is treading water. It is actually waiting, and it is in a state of flux. I think that's the best way to put it. Not knowing whether to go higher, to go lower. The futures were up very sharply this morning. Let's have a look here. Now, I'm going to give you some... I'm on battery power all the way through. That includes only line that wasn't hit was the telephone line, and I still have my hard line so that I'm able to get calls. But everything else is starting to run out. I actually said it was funny. I remember in the days when I was working very hard to become a professional musician. And, you can't, I lived in an apartment, you can't really practice all the time. I used to have to go and I'd sit in my car down by the lake. I'd put the music up and I would practice for hours. Open the door and just practice away. So right now what I'm doing is I'm looking at a situation where this morning I did the same thing. Recharge the batteries in the car battery and we're ready to go. So let's run the numbers. The Dow is down 5. Oops, no, let me do this. I'll go one at a time. I think it's going to be easier. I don't want to be changing screens. I don't want to run out of battery power or anything like that, so I'm just going to be as safe as possible. You can see the charts right there. We're set. The Dow is down 24. It had been up. In fact, the Dow had been almost towards the 9-period exponential moving average of 13,206. This morning went to 13,186. So that is 20 points. I mean, it's reversed. And now the Dow is down 21. And what's very interesting is that the MACD is showing the moving. This is such an important indicator. The moving average convergence divergence. What a lot! Four words that are put together, strung together, but it's simply the MACD. The MAC. Well, this MACD. Oops, there comes a call coming in. I hope I'm not being interrupted here, but I can't take any messages, so we'll just keep going. The Dow is down 17 points. But what's very interesting is that the stochastic at 8.27 is flat. Flat, to me, is useless. It is just, there is no inner strength. And that says to me, the day is young. If the slow stochastic, let me just move it so that you can see it much better. I'm using the white screen just for now because you can see the numbers a little bit easier, I think. I'm not sure. But if you look at the candles that were forming over the last 4 trading sessions, not 4 sessions, but 4 trading sessions, from the little kind of a doji on the 24th with a low of 13,063. The next day was 13,039. The following day was 13,040, a fraction higher, but it was higher with an inside day candle. now what I said in I'm not sure I'm going to be able to see it because it's in my desktop computer program. What I had done was, I'm going to do it right now. I'll draw it for you. This is not what I had written. This is on the 8th of October. This, of course, is quite a deal more. What I'd drawn was a downside wedge. So that wedge says very often, and if you don't mind, I'm going to make it red for now just so it shows up nicely, red there and red there. That wedge normally sees a bounce because it is coming to an apex, and at that apex, very often, that's when you see the stochastic start to form some kind of a low. You see the MACD. This is a 120-minute chart of the Dow. Now look what's going on. In terms of the chart pattern itself, you've got a bounce which has taken it to, let me just check, so that's 13,040.48, 40.48. Then the last one was 13,039. So what you've got is a fractionally higher high, so you can count that as peak A. This is a B, but it could be a B minus and become an arch formation. So it fulfilled its obligation, and that obligation is to give some kind of a bounce. The bounce might have lasted longer under other circumstances. I have no idea what the circumstances be. It could be that there's very low volume trading at the New York Stock Exchange. I'm hearing that while many of the folks that are involved with it very, very early, the most important thing is that they don't have any wireless access. They have no access. They're just flying blind. When you're flying blind, you are not about to put on 100,000 block of IBM. I just don't see how anyone's going to do it unless they are so convinced that this is a position that they are taking the opportunity to buy because they were going to buy it this week at this price. I just don't see how you're going to get big trades like that. So you might see them, but they could be arbitrage of some sort. So I'm not sure. What has happened is a Dow tried to rally and has pulled back. But the stochastic is still good, the MACD is still good, and it says, you know what, there's still a little bit of inside strength. So now let's go on, and we'll go to the S&P, because this is a very important week just in terms of giving parameters. So the Dow, I'll go back to the Dow in a moment. I just want to get to the S&P. Oh, did I do it? Yes. So the S&P is down 3. It also had a little bit of a pop. Where to? Right to the 9-period exponential moving average. I've got a webinar coming up. It's a 2-day live, all-day webinar. And when I say all day, I mean all day. We will go on after the bell because I like to talk about what we can expect the next day based on all the ChapmanWave methodologies that we'll be studying. So the 9-period exponential moving average is a really potent force in the short term. Looking out, you can look at something like the 200-period moving average, which is down at 1374 on the S&P. Right now, the S&P is at 1409. That's 300 Dow points at least. So we don't have to talk about that right now, other than it's an outside look at the market. The inside look says, hey, S&P, you better hold a 1403. I would say 1400, a psychological number. Why? Because if that 1400 support goes, then the 1396 low of the 4th of September becomes a target, and then all of a sudden, the magnet of that 200-period exponential moving average kicks in. Why? Because it's a look-back period of 200 bars, in this case daily bars, so it's daily moving average, exponential. You know, I love the exponential moving average. I've worked with moving averages for at least 30 years. And I've just found that there's certain ones that have given me the best information based on the ChapmanWave, based on support and resistance levels. The others, there's nothing wrong with the others. I'm just saying that for my technique, this is the one that I like, the exponential. That's not to say that I wouldn't put a smooth moving average in or a simple moving average, which in case, I'm not sure on this particular charting program I've done it. I know that I've got that dash line, which is 32. And I like to put anything that's been told to me by someone I respect. I like to put it on the chart. I like to say, hey, so-and-so uses this, and I have a lot of respect for their work. I'm just going to throw it on, and at any point I might find that I want to use it. Well, I am beginning to use it, and this is the 32-period moving average. I'm not using it a lot. I'm just using it in certain circumstances as a kind of a backup. So now the 13-period moving average is a very strong resistance, and that's somewhere around the 1431 area. But the 1421 area is the 9-period exponential moving average resistance on the S&P. So I am going to do this. I'm going to go on quickly. I don't want to move the chart. I don't want to look at the backup for all the different averages. I've not updated this particular one. It's the composite. The composite. Now look how important the 200-period moving average is. Did I know that it would pop up? No, not at all. I forgot about it. This was fantastic support. This beigey brown line. I'm experimenting with the colors to see which one is most appropriate. I haven't finalized it yet. But look how it held for the composite, the NASDAQ over 2,000 stocks composite index, when it was all that support during the summer into July the 25th. And then you didn't have to even worry about it. It went all the way, this index went all the way to a double top at 3195.67 on the 14th, and then 3196.93, the high on the 21st. Now what's the high? 31, yep, the high of the 21st of September. Now we're back there with a doji. If this doji candle is broken to the downside, the S&P, the composite goes to 2944. It's at 2971 right now, down 16. That means that you've got tremendous resistance all the way to 3007, which is the 9-period exponential moving average. I would like quickly to go to gold, although I'm a little bit behind. The GC contract trading it's up 780 at 1790. I still say that any bounce will be a counter-trend bounce, and I believe that we'll have somewhat lower prices. I suspect that we will get to the 1685 to 1673. 1673 is the 200-period exponential moving average, to test that at some point very soon. So that's that. Let me go on to bonds, because I think it's really important right now. I'll go to the TLT Lehman 20-year T-bond fund. Nice pop-up, 123.10, but I've said that 123.80 is really where the TLT is beginning to say, stock market, you're losing your strength to the upside. I'm going to be a resource here for funds as the flight to safety starts to unfold. So that's TLT. TLT needs to break above 125.24 to start leg D. But there's a chance we could get an overlapping wave, all sorts of things. All I can say is that there's tremendous resistance all the way from 124 to 125.24. A lot of resistance. But it is saying, let me quickly go to the VIX. Yep, we got a break coming up. Let me just go to the VIX as we're doing that. That's the volatility index. And that volatility index right now is trading at 18.60, up 79. I would not be surprised if we're going to get a leg D. I'll try to finish some of these charts with a notation. When we get back, hold on, Basil Chapman, TFNN, 877-927-6648. Love to take your calls. I'll be right back after this important message.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direxion Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direxion Shares gives you the tools for both sides of the trade. Discover how we can help at DirexionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direxion Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direxion Shares. To obtain a prospectus or summary prospectus, please contact Direxion Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
Millionaires are made every day. The fact is, living your dreams is possible. Someone, somewhere is going to get rich. My recommendation is, let that be you. Each day, someone is making the decision to better themselves and creating a plan to fulfill their financial dreams. Let that be you. The key to turning dreams into reality is to take massive action. Let that be you. I'm Steve Rhodes, co-host of the Money Master Show with Tom O'Brien, seen daily at TFNN, and I can help you with your journey to great wealth. I'll show you how to create the ultimate financial edge, a set of tools, insights, and strategies that are part of my daily newsletter service, Mastering Probability. You'll have direct access to me by phone, email, and my private library of trading and investing secrets for 30 days with an unconditional money-back guarantee. I'll take your trading to the next level. Click on my name, Steve Rhodes, on the homepage at TFNN.com and turn your dreams into reality. Mastering Probability, folks. Let that be you.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Hi, folks. We're back. Basil Chapman, Tiger Technicians Hour. And what do we have on this Halloween evening? We have our Great Panther Silver Halloween giveaway. And it is David in Oklahoma. Ooh. Hi, David.
How are you, Basil?
I'm well. Congratulations.
Thank you very much. I listened to you all quite a bit. I listened to Steve this morning, but I had some things to do, so I got away from it.
Oh, all right. Well, I am on right now, and it's my absolute pleasure to be able to say you are the winner of the Great Panther Halloween Silver giveaway. And, that's good news, right? You never expected that.
That's wonderful news.
So while you're online, do you have a question? Do you have a market question?
Sure do. I'd like you to take a look at one for me. Source Fire, the symbol is FIR.
FIR, yep, FIRE, FIRE. I have no idea if this particular package here has any notation on it. Let me just check. No, it doesn't.
They have earnings tomorrow, and they left the window open down there back a couple months back.
So let me just do this quickly. So monthly is A, B, C, D, and then it has an inside, A, B, C, D. Makes a beautiful doji candle, the long-legged candle, the one that I love to teach about because it says at 55.70, at 59.64, the high of May of 2012, there was a long-legged doji with the wick, the body of the wick, which invariably says no matter how far you go down, you're going to at some point touch the middle of that wick in that candle, and it's exactly what it does. It plummets from the 59 to the 41 area. It skyrockets back to 57.98. Just to say, it must probably have left its hat and coat right there on the candle. So it gets the candle, it gets the hat and coat, and it's gone, and it plummets to a lower low. It's making lower highs and lower low. Source Fire Inc., FIRE, trading at 41.94 in the monthly chart. That says a peak D with a MACD just about to turn negative, but it hasn't. Today's the last day of the month, but it hasn't turned negative yet, with the stochastics lousy at 73%. The weekly chart is making the pattern that I call a double top pattern. It's like a heart-shaped pattern where it makes an arch formation, comes back down, and it makes another arch a bit lower down, and a little candle from last week says that it better not close, that is, not touch, but it better not close under 41.28 this month, or else it's going to test the 40.68 low of the week of the 19th of October. Technicals are very poor, but the stochastic says, you know what, it could be ready for a bit of a bounce. Now we go to the daily chart. So you're looking for a play either way, right?
I'm looking for a short play on it to close that window, that gap it left.
Okay.
Daily.
But I'm pleased you said that, because everything I'm looking at here says that if it was to pop, it's trading at 41.93 right now. The 43.24 is the 9-period exponential moving average, and 45.87 is the 200-day moving average. Now, what I would do is, I'm in agreement with you. The only thing is you don't know. There are two things that could happen. One is it just gaps down, doesn't give you a chance, right?
Right.
It's had so much weakness since September, it wouldn't surprise me if it's just a little bit of a pop, just to say, oh, man, I want a relief rally, and it pops a little bit. So I'm in your camp. Now, how would we play this? What I'd be looking at, I'd have two possible positions. One is, if it gaps down tomorrow, it's this afternoon that the earnings come out?
Right.
Okay.
No, it's tomorrow.
Oh, it's tomorrow morning before the bell, do you know?
I don't know if it's before or after the bell.
Okay, well, check that out, and I'll explain why. If it's before the bell and it gaps down, all I can say to you is you're going to have to wait, because it's saying there is a lot of weakness here, but you've lost obviously you've lost the best opportunity, because it could pop up at any point, and that pop-up could be 8 to 12%. You never know, right? So You want the best possible opportunity. What I'm thinking of is you just find out when the earnings are coming out. If it's tomorrow afternoon and it pops up, what you want is that tomorrow. What is today? Today's Wednesday. Yeah. On Friday morning, what you want is you want a nice spike to the upside. Don't be over anxious to short. Let it pop, and then as soon as it starts to pull back, that's what you really want to see. A little bit of. Do you ever look at smaller time frames, like a 60-minute or 120-minute chart?
Yes, I look at 30 minutes all the way down to 10.
Oh, you do? Okay. Then you know what? I've got a break coming up. Let me just think through exactly what the numbers will be. I'll base it on the 120-minute chart, and I'll be right back with some numbers straight on the return. You hold on?
Okay, I sure can, Basil.
Will the winner of the great...
If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. You've heard Tom O'Brien on the air, and you've seen him on Tiger TV, as well as being featured as a regular CNBC guest and contributor, and now you can have access to his expert trading advice each morning through his daily trading newsletter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, gives traders, investors, and money managers a thorough strategy for trading stocks, options, and indices every market day. Market Insights comes out each market day before 9:30 a.m. and provides traders with Tom's daily commentary, opinion, and specific trade recommendations on the markets. Using advanced Fibonacci methods, volume indicators, Gartley patterns, candlestick charting, gaps, and market timing, Market Insights will give you specific trade recommendations including entry, stop, and exit prices. The summer is over and traders are back. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN and Great Panther Silver have teamed up for another exciting silver giveaway. The Great Panther Silver Halloween giveaway will be taking place at the end of October, and for 3 full days, we'll be giving away silver coins and bars every hour from 9 a.m. till 6 p.m. to one lucky winner randomly chosen. There's no purchase necessary. For more information and to fill out your registration form today, simply visit the front page of TFNN.com where you'll find all the details. October 29th, 30th, and 31st, we'll choose one lucky winner that will receive a silver coin or bar courtesy of Great Panther Silver. Winners will be announced live on the air each hour for 3 full days. Don't miss out on this great opportunity to win free silver from TFNN and Great Panther Silver. Register today by visiting the front page of TFNN.com, and for more information on Great Panther Silver, you can click on their banner on the front page of TFNN.com or check them out on the NYSE Amex, symbol GPL, or on the Toronto Stock Exchange, symbol GPR.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Everyone, we're back, and we're online right now with David in Oklahoma, the winner of the Great Panther Silver Giveaway, Halloween Silver Giveaway, today, tomorrow, and Friday. So, right now we're looking at FIRE, F-I-R-E. It's trading at 42, round number 42, minus 58 cents. And this is Source Fire Inc. And David is of the inclination to short the stock. It's had a terrible couple of months, and I'm in agreement with him as to the downside. And what I did is I went to my black charts, the black background charts, because I was sure that I had done this. I remember doing this, and there it is. So now what I'm looking at, David, is there are two things. It's made a left side, right side price time match to the low of the 17th of October in the daily chart. Now it's trying to rally, but it's basically formed a rectangle formation. The weekly chart has a pattern that I call the dreaded H. It just looks like a lowercase h, and I'm showing it right there and right now. And what happens is the price comes down, and it could be sloping like it is now, but it looks like a lowercase h because it comes down, then it makes an arch formation and retests the left side low, which is at 41.34 back in the week of 3rd of August of this year. What did I say, 41.34? Well, it's gone down to 40.68, so it's gone lower, but it hasn't closed lower. And the monthly chart, as I said before, made a peak E. It's actually a peak E in the monthly chart, and at this particular point, all I can say is the monthly is looking like it needs to come down further. So here's what I'm thinking. It's taking a bit of a risk, but I my money, so I don't want to be. I want to be very cautious. If it was my money, I'd be even more cautious in terms of the way I would look at it. But if it's your money, what I'm going to say, this is what you should think about. I don't want you just to jump in and do it. If you're looking out, do you ever use options at all? Did I lose? David, you there?
Yes.
Yeah. Do you ever use options?
Yes.
You
That's
do.
what I'm wanting to trade or puts. Just put.
Okay, because you never said that, but I could tell from your voice that I was talking to an option player. All right. If you are of the inclination to do this, I'd be looking at a December rather than November, and I'd be looking at something like you could do a 40. I don't know if they do 37.5. Maybe they do. But I'd be looking out a little further, and all I would do is I would set up like 1 or 2 options. I just put them into play, and I'll explain why. If there's bad news and it tanks right away, you're in the trade and you're in the money. It gives you time to think about it. You could add to it. You could go short. You could do some other things. Let's just imagine the other case, and all of a sudden they come out with some just a lousy earnings report, but a positive outlook, or a positive earnings report and a lousy outlook, but the market likes it. What if it pops up? Well, if it pops up, I see tremendous resistance. I'm sure you do too, in the 43.75 to maybe the 45.87, 46.20 area, and then it should make. And the reason why I'm saying this, when I go to my white charts, I did a little work on it, and there's the pattern that goes from the lowercase h to an M formation. And what could happen is that it dips quickly underneath 40.68. Then it bounces up. That's that M formation. That same bar that goes under should start to move back again, as if it just doesn't want to leave this area. Then it should have a bounce, and the bounce should go to the top of the left-hand corner arch, 44.28, or even 44.66. And at that point, it should start to fail again. You can see where I'm going with this. What I'm saying is that you might want to think about getting a put option that's further out, gives you a little room, you're in the trade, and your risk is on each one would be, I'm just imagining now, so the 40 would have, so it's at 42, so it's already 2 points. I would say that you probably have about a 50% risk on the option in the shorter term, but it'll go quickly in the money if this thing really starts to fall. So that's one way to do it. The other is just to step aside, have patience, let it trade after the announcement. If it drops down, I would still wait for a bounce to get short, but if it pops up, it makes it much easier for you, because you can, as it arches over, that's what you want. You need to look at it, say, a 60-minute time frame. As it makes highs and then it starts to make lower highs, you can put in an option play, and I don't know if you use stops on an option, but if you do, I would make the stop a little bit above your entry, above the arch high. So if, let's say, pops to 44.60, I'd make 44.70 or something. If it gets there, I say, okay, be careful. Don't add to the position. Don't do anything but monitor it. You could get out. You could always get back in again, but it gives you some room. So is that something does that give you a sense of what I'm looking at? And I'll tell you why I'm looking at it, because everything about the chart formations say that even if it pops up in the first week or so of November, there's a really good chance it's on its way to making lower lows and lower highs. And that would say to me that the candle that I'm looking at is the candle of February of this year in the weekly chart, and that goes all the way to the 35, 34 area. So I think this has got weakness, and I'm sure that's what you're looking at. I hope that helps you.
It does. Thank you very much. And it's a wonderful being a winner.
And let me once again say, David from Oklahoma, congratulations on being a winner in the Great Panther Halloween Silver Giveaway.
Thank you. Love your
thank you so much for calling. Thank you for calling and listening to us. It's just great to have you as one of our TFNers.
I tell everybody about you.
Thank you very much. Have a great day.
You're welcome. Thank you. Bye-bye.
Thank you very much. At David, Oklahoma City, we were looking at FIRE, F-I-R-E, and that is, I keep forgetting what it is, Source Fire, Inc., And I don't remember what they do. Source Fire Inc. Someone will tell me, but I won't be able to see it. Now, let me just see what we've got here. I still got you half a chart. Chart weird again. All right, let me just try and do this. If my chart is weird, I'm going to say, is that better? I'm going to drag the chart. Oh, let me do this because there's a bunch of things that I want to do. Oh, I'm sorry, I'm messing around here. Okay. There. I'm using the black background chart. Just for the moment, I can see a little bit easier. I'm going to go to some other charts that I think are charts of interest. If I go to the Qs, 1, 2, 3, the NASDAQ Qs, based on Apple, sure. It's not just that. There are numbers of stocks in the NASDAQ, especially the IBD 100, IBD 50, but the top 20 especially. They have not been participating in any of the rallies. In fact, they've been in their own little bear market. Now, some of them make really quick jabs to the upside when, in fact, there's an opportunity to rally. But the majority are starting to say, we're kind of tired. This has been a spectacular run, and we're just tired. So we've got a double top. Now, this is a technique that I teach in the webinar that I'll be giving this live 2 days, Thursday, Friday, December the 6th and 7th. You get tons of bonuses with this. I'm so enthusiastic, as you know, about the ChapmanWave, about under the umbrella of the ChapmanWave, there are over 24 techniques that I teach. Many of them are proprietary. Why? Because there is no other technique like the ChapmanWave. Nobody actually counts the higher peaks or lower troughs. And it's such a simple thing. Look what I've done. ABCD, ABCD. You've got the same thing here in the NASDAQ. But when you get to a fractional difference in the highs, where it should be leg D, I've learned over the years to call it peak C1 and peak C2, with the sell signal probably coming on C2, meaning be careful because it could be coming down quite sharply. Well, that's what happened. The NASDAQ, the Qs, power shares, Q Trust Series, failed. And they started to come down, making lower highs and lower lows. They've reached a point here at the 200-period moving average, which the low today is 64.73. Trading right now at 64.94, down 42 cents. Tried to rally, couldn't hold the rally. The 9-period exponential moving average, in this case it's white, is strong resistance. And that resistance is saying, hey, if you can't break above 65.78, the 9-period exponential moving average, and try to get to these other moving averages of importance, like 66.21, or even higher, the 20-period moving average up at the 66.67 area, after all this time taken to come down, that is just demonstrating weakness. And that's really what I'm very concerned about. So when I look at the NASDAQ, the Qs, I'm saying, stochastic gave a slightly positive divergence. The MACD is still very negative, but is flattening out. There is no reason, there should have been no reason why today, after all the selling of the past week or two, that there wasn't some kind of a bounce. And so far, there hasn't been a bounce. And that's very disappointing because, well, the day's young. It says that if I go to the left side, the next area of importance is going to be the low of 63.91. That was made on August the 2nd. And all of a sudden, if that happens, you're looking at that 200-period moving average, in this case, this kind of light blue, purplish area, mauve, I should say, that becomes resistance. If I look at the weekly chart of the Qs are right at this particular point. They've made the double top. I have no choice but to call this peak E. In fact, I'm putting a down arrow here. I got no choice. This is the way the ChapmanWave works. It's in a down arrow. It's in a sell. It's in a sell mode in the daily. It's gone to a sell signal in the weekly, and on Friday it might be confirming a sell mode. It's just about to break uptrend support. The stochastic's at 46%, and the MACD is not good. But wait, this is not the issue. The issue is how do I deal? Oh, you're not going to be able to see this. How do you deal with this monthly chart, which has an alternate wave count of C/G? Oh, no, it's not C/G. We've already been through G. Of C. If it's a C and you have to still go to D, we have to say that there will not be this great cascade, this waterfall decline that's been talked about in the media, economic cliff, that at some point there will be a rally, and that rally should squeak to a new high above 70.58. Let me just, 70.58 to 70.59 or higher. I'll have to do a little more work on this because if it is only a peak C, and it cannot be, peak C if there's no new high by this afternoon, and I doubt whether there will be, that's a positive looking out for the NASDAQ, and the stochastic and MACD in the weekly charts so far are holding very well with the stochastic at 86%. So you can see how I base my notations and my work on the notation of the Chapman wave. And C should go to D, and this is the monthly chart. Well, now here's the other thing. Let me do this because we've got a moment. I'm going to go to the SPX and explain something. The SPX, the S&P 500 index, unless this afternoon there's this incredible rally that takes it to 1474.52, 1 penny high, penny above the peak that was last made, this is going to be a peak. The Dow has not made a peak, and that's the fascination that I've had all these years with the Chapman wave. Why? Because this month last month was 13,653.24. This month is 13,361.87. So leg F/B is still continuing. Well, if that's the case, if this is going to be if it's going to be peak F, that means the entire month of November does not see a high above this high of 13,661. Is that what I said? Yeah, 0.87. Now, here's the other thing. I can get a recycle if the Dow doesn't break under 12,000, say 492. Starts to go under 12,400. I have really no choice but to say it's a peak F, and it's going to be a spectacular move if it recycles up. So, on my one hand, I've got the potential for a pretty severe top in the S&P and the Dow. But I need to see levels on the downside taken out. Up until then, I have to say this is a high-level consolidation. Another reason for calling it a high-level consolidation is that the VIX index, the volatility index, is rallying at 18.47, but has not gone into the 20s. So I'm going to make it real easy. If the volatility index starts to trade in the 20s, there's just a really good chance that the selling is going to increase and the Dow will go down to those levels I was talking about. Let me give you the level on the SPX because obviously this is a very important period we're coming into, and it's the election. And the SPX says a close below 1397. I'd say 1395. A close below 1395, that would correspond more to what we're seeing in the Dow. And I have no choice but to call this a peak. Well, I already have to put a peak E. A peak in the weekly, but the monthly could be making a peak F top. And that's going to be really important in my work. Why? We know from history that peak F tops, like what was made in the Dow back in October of 2007, and the peak E top at 1576.09 back in October of 2007 in the S&P, those became pretty significant. And I have to tell you, the more work I'm doing when I get a chance, if I have my electricity on, which is not on right now, but the more chance I have to look at the different charts, the more I have to question and say, could this be a high-level consolidation? And at sometime in the next 3 to 4 weeks, we actually have a pretty decent graph.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to check out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday, Wednesday, and Friday, 11 a.m. Eastern, on TFNN.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi, everyone. Basil Chapman, final segment of the show, and we've got Lou in Nashville. Hi, Lou. How are you?
Okay, Basil. How are you?
I'm good.
Good. Okay. I was just wondering if it's a good time to jump into silver, SLV.
So SLV, folks, is the iShares Silver Trust. Now, I know I've said this for a while, and I started saying to myself, wow, I've got this weekly chart and monthly chart of silver, SLV, still holding pretty darn well, and I've been saying that I'm expecting lower prices, and we have gone lower. We went all the way from the high, most recent of 34.08, down to a low of 33.53. I'm having a tough time considering to go long silver, but I'm looking today, just as I came on, the few stocks I managed to see, I'm looking at some of the silver stocks that are actually acting quite nicely on a short-term basis. I know that it's going to sound a little weird, but I'm going to, from my point of view, I think we're very close to a pullback again in silver to retest the 30.50 area, 30.42. Now, if in your work that you do, if you can see that there's some upside activity, then I'm going to recommend right now that you take a very small position in silver, SLV, and you have a stop somewhere around, because you've got a very small position, so it's at 31.31. 31 might be a little too tight. Make it about 30.90. That's the kind of stop that I would have. And the only reason why I say it, silver's been down so much, that even the MACD of the weekly chart is suggesting that there could be a little bit of a pop-up here. If that pop-up works, you could get yourself a point, and I think a point, or even a point and a quarter, would be very nice if it's a short-term trade. But my bias right now is to still say that we're going to go lower. It doesn't have to be a smash, but I think we're going to make lower highs and lower lows a little longer in the GLD and the SLV. So I hope that helps you. But if you do feel strongly that you can see a bounce, then the best thing is take a smaller position and put in a little bit wider stop. And I can just tell you this, that if tomorrow, if it takes out 31.41, that's the high of the day today, then there's a good chance that it's going to go to the candle of the 18th, which is around about 32.05. So, it's a very small percentage gain, but you're in the right position then. But I think it's going to make an H formation. So I hope that helps you.
Yes, it does. Do you have time to look at Apple?
Very good. Let's look at Apple because it'll be the last thing we do before we go out. Yeah, Apple, you see, Apple's the same thing. There's no strength at all in the stochastic and the MACD. It's had a pretty steep decline so far. It's actually been straight down under the 9 EMA, and it's trading. I don't know if I can do it. I don't have time to do a left side, right side price time match. But 582 has been the target that I've been talking about for a while, the 200-period exponential moving average. It went right to 587.70. So it is really close to some kind of a bounce. What I would do, I would not get carried away with Apple. I think it's under selling pressure. I suspect that the next bounce will also form the H pattern, and it should be coming a bit lower again and get to that 582 level. If you want to play a bounce, that's okay. But I'm actually looking to see if there's a very strong rally. The next pullback, is that a shorting opportunity or a buying put opportunity? But I would not actually... I personally wouldn't actually have a position in Apple right now if I didn't have any. I'd be waiting for a bounce to possibly short. But if it hits 582, I would consider that a very short-term positive for a bounce, and then I would have a stop of about 6 points, and I'll let it run. And if it runs, it could even go to 605, 598 to 605, maybe even the 9-period moving average at 614. But that's where I would enter, closer to 582. Hope that helps you.
Yes, it does. Thank you, Basil.
Thank you very much. That's Lou in New Hampshire. And folks, this is Basil Chapman, down 13. I'm watching very closely to see if the market holds 13, down holds 1,300, closes below it, or the S&P holds 1,402 to 1,400 in the next day or so.